Good day, Market Chameleons and everyone joining for the first time. Thanks for coming by and checking out the midday pre-market report with Ryan Mastro from OptionsRobot. Before we get started, let's take a look at the share disclaimer. Please be aware that neither Market Chameleon, Ryan, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars shows, are for informational purposes only, concerning all the tools and features on the various products. With that, let's welcome Ryan Mastro to the show. How are you doing, Ryan?
I'm doing well. How about yourself?
Great. I'm going to share the screen. And there's the beautiful landing page for Market Chameleon. So what's going on today, my friend?
So a lot. I mean, we got a pretty hectic market. And I think a couple things. Let me just go over the charts a little bit here to show you a couple different things. Let's go over to our charts. Obviously, we start to look at the broader picture here of what's happened in our kind of big ETFs. Friday, we had a really ugly looking sell-off, comments from Trump that we're in a trade war. They kind of walked them back over the weekend. So the market started to rally here beginning of the week. And we've really gone nowhere, right? If I were to zoom in on this and just kind of do an auto on this, you can see how this looks. You know, we've gapped up a couple of days now, yesterday and today, and we're actually on a lower position from where we were yesterday. So kind of down and into this, you know, what the heck is going on? So, you know, I took a lot of stuff off, and I haven't done it quite so much. I thought I had it in this system, the Rigetti that we still had on, and these are all the other positions. So let's see, Rigetti still has to be come off. So nice profit in that thing. And we look at that chart. I know we've talked about this for a while now. There's like 75 people that were following that trade, but Rigetti, you look at this quantum space really getting hit here at the moment. This got as high as 58 yesterday. Maybe it was 58 over here, 58.15 on, I guess that's Tuesday. So Tuesday got up there, now back off $10. So a lot of those names are getting hit. So something like your QUBT, that's rolled over, your QBTS, that's rolled over, your IONQ, that's rolled over. So a little more of the speculative names are starting to get hit here. Stuff that we've been watching, stuff that we've been playing. There was a news story that came out. I can't remember the name of the quantum. It could have been IONQ, but he came out and was talking that this should be the same price. The CEO came out and was on some show, came out and said, oh, it should be equally priced of at least Cisco. Well, what did he do the next day as the stock kind of jumped up? He sold into it with a stock. So maybe he had already queued up and ready to go, you know, but I think it was something like 100 million worth of shares that he let go of that thing. So I think it was IonQ. Don't quote me on it, but there was one of these that was pretty crazy. And I think as these things are rolling over, same thing with Bitcoin. Bitcoin rolling over and not able to get out of its own way just kind of shows you that maybe some of that speculation coming out of the market. And then I think with speculation coming out of the market, obviously some of these big high flyers, there's a ton of names that have been in this kind of just vertical type of move. And, you know, I don't want to say IONQ has been vertical, but I mean, if you look at it from a weekly perspective and you start to look at in the big picture, that's kind of pretty vertical, right? You've gone from 40 to 80 in a month and a half, right? That's pretty aggressive in terms of the big picture there. So 80, no, I'm sorry, that's I've got up to into the 80s, right? So that's great movement if you can be on the right side of it. So I'm just kind of a little bit cautious now. We're going to be taking profits off of anything we have that's been up like this because it's now taking out significant lows, starting to retest other lows like this. So I think it's a big deal for where we're at now. Trump basically has come in and said that as of last night that we're going to trade more with China. Flat out said it. Now, does that change tomorrow? Does that change in a week from now? When is he going to have this meeting? Does that go through? Does that get canceled? If it gets canceled, okay, clearly then we're in a bigger problem than I think everyone's leading into, or reading into, I should say. But if we do have the meeting, maybe we can come to some type of meeting of the minds that we don't have these massive tariff increases and we can kind of back off some of the things that China has already done. Trump's comment basically said that China is no longer in a talk first, and then make adjustments later. They're in making adjustments first or taking action first and then asking for forgiveness later. So that's kind of where we're in with China. Now, I was just got out of another webinar and we were talking about the VIX. I don't know if the VIX is going to pull up well for me here. Let me see if I can pull up the data. VIX. Yeah, I'm having some problems with this one. Yeah, I haven't been able to get that data in here. There's been a problem with that. And UVXY, I don't think that will pull up. Maybe that will. Maybe that will. So at least that's starting to show you what's been going on with volatility. And again, from a big picture perspective, volatility holding in here while the market's really not doing much, right? We go back to the SPY, and you can see we're having this kind of a gut punch of a reversal. Again, another red candle coming into this with really nothing being said. So volatility is kind of holding steady here. So at this point, I would make sure from a longer term perspective that you are at least protecting your portfolio, right? When I talk about long term, your 401ks, your IRAs, that you are understanding where you are. You're at the top of the market, right? You're at all-time highs. I mean, when I talk about that, we're a golf shot away from being at the all-time highs. So, when we think about protection, there's long puts, there's put butterflies, there's put condors, there's straight out naked put purchases. It's expensive to trade against like a spider, so probably have to deal with some type of a put vertical or one of those other strategies, or some type of a collar if you have positions. So those are things I mentioned a couple of weeks ago, as we're getting up in here and getting to these highs. But I would say we're in more of a distribution mode right now, where you are. I don't know if this will pop up for me. Nope, that's not what I wanted. So not going to pop up, but we'll leave it as is right now. I was going to try to draw on here, but I don't have the drawing tool popped up and ready to go. But when we look at distribution, what does that mean? That means that there's been more selling. Now, we moved up this week here. We continue to make higher highs, but they continue to sell into those highs, right? We had one day out of the week that basically was a bullish candle that made you feel like, okay, we could be really doing something here. Made a slightly higher high here, and then that Friday basically just got absolutely lit up with what was from the Trump comment. So, this is one where we're seeing this distribution. Does this distribution continue to play out here? Can we still have increases in the highs? Well, today we had a lower high, not able to retake yesterday's high, and selling back off. Does this turn into a Thursday, Friday of last week where people start to kind of come into question or call into question what's going on and where we're at? We still have so many factors, and I'm not trying to belabor the point, but you have, our government's in a shutdown, right? We've been shut down for what, 2 weeks now, 3 weeks? I don't even know anymore. It doesn't really matter, right? The market doesn't really care at this point. But as this gets extended, that's going to play a much bigger factor. We have gold and silver and platinum, palladium, all making all-time highs, right? So you can go to GLD and look at gold, just continues to print. You look at the SLV, just continues to print higher highs, just been absolutely insane. I've been mentioning this in a lot of different classes. I believe I mentioned it in here. There's a variety of different ways to play silver. I would recommend playing silver probably with the miners. If you can get your hand on physical, get your hands on physical, because that's trading at a much higher price and it's going to continue to go. There's problems in the SLV, which is an ETF. And this is one where they are now charging higher margins to be able to short this thing. So they call hard to borrow. And what happens with that is you get charged an additional fee if you want to borrow the share. So not only am I trying to borrow it at $48, there's a 15% additional fee on top of that to be able to short them. So again, I think you're going to get this where the inventory or the lack of inventory is part of the problem, and that's why we're getting this across the board type of scenario. What's happening in this broader market? So I would look at some of the smaller names, maybe even some of the really micro names that are a couple of dollars, $1, under $1. Some of the ones that I've been playing, CDE, it's a little bit higher price now. I started looking at this down, it was around $10, $11. Hecla Mining, I started looking at, it was like $6 or $7. It's now trading $14, $15 now. So what's the high there? High there is $15.30. So, these are ones that are pretty solid companies. There's a bunch of others like AG, First Majestic, maybe not as much volume in there, but again, similar type of chart. You can go into any list you want, try to find some of the cheaper names. There's plenty of miners that are much smaller in market cap, but still could benefit. And what I think you're going to see here in terms of the bigger picture is, if there's a lack of inventory like there is, we know from Asia that they're charging about $108 I saw on one website in China. And this is basically, to get their hands on physical, because you can't get your hands on it. So they'll be able to demand a higher premium. So if you want to get your hands on physical, it's obviously going to cost you. Now in the US, you can get it for only a couple dollars over. There's still sites that have them still, but I will say, you look at Perth, which is a city in Australia, but they have the Perth Mint, and they are out of silver. You look at the COMEX, they have something like 170 million shares, but most of those are, ounces, but most of them are accounted for. They're owned by other people. And the lease rates on those are going up. So people want to borrow against them, they can't, because the lease rates are getting too prohibitive. So there was a couple analysts that came out and said that the COMEX needs to borrow or get 150 million ounces. Production in a year is only a little bit more than that. So they're not going to be able to get those ounces anytime soon. So they're going to run out of silver. And the people that are holding it in those vaults are just going to basically say, thank you very much. We're going to hold on to our silver. We're not loaning it out unless we get a much higher premium to do those loans, right? So they're going to get a benefit of owning just the physical, because they can loan it out in that aspect. So that's something that's coming. The other part of this is what happens with futures. If futures start to get a higher margin, then you're going to have a lot of guys start to cover their futures. And the paper money is not going to be able to paper over like they've done in the past on the price of silver. So I think we're going to have a bigger issue there. If we have any kind of a blow up in the futures, the silver futures, then and they basically start to raise margins, I think that's going to go nuts. I think that if that happens, then you're going to start to see a lot of these smaller miners really play into a bigger picture, where they're going to start to either be acquired or basically do deals where you're going to start to say, hey, I made a deal with this miner and some big company that needs silver to get, have a very specific control over their inventory at certain prices. Because if futures blow up, you don't have the inventory. Silver is used in so many different industries, and it's very important to understand that this is going to play a big factor across the board here. So it's going to be inflationary between gold and silver. Anybody that's using those products, mostly silver, and it's going to cost more to go into those products. So I think this is something that is, even though it is overbought, you look at something like an RSI, right? Something like let's see, something like this. You can see that we are overbought and stayed here in this overbought zone. But I think, this is just on AG. So if you put on like the SLV, right? We've been, I don't know why that disappeared. RSI, there we go. So you can see that that is still up and above and staying up here, pinned up here in terms of the movement. So this has just been absolutely phenomenal in terms of the movement across the board in that entire sector. So there's plenty of ways to play it. SLV, they actually have ones that are like 2x, 3x in terms of silver. There's physical silver, which is like the Sprott PSLV, right? That's one I've been in. I've been riding that wave. So that's one that holds their silver in a much higher ratio. So that's been doing very well. That's finally picking up pace. But you could play, there's miners, there's silver miner juniors. I think it's SILJ is the junior miners, and the SILY, that's a covered call ETF for silver. I wouldn't touch that one because it's going to be much more muted. But here's the SILJ, which is junior miners. So another ETF that you could play. So there's plenty of different opportunities there. If you want to play the gold, the GLD, or the GDX are ones that you can look at, right? So they've been starting to pick up pace, or the GDXJ, which is the junior miners. So again, some of those smaller names could really start to play into the factor. Now, come back over to our markets. Obviously, we're getting into earnings season. I typically don't play a lot of earnings and try to be the guy that's going to call, which earnings are going to beat. I will say that we've been watching ASML and Taiwan Semi. ASML gapped up on their news, right? They basically had a big pop up on their earnings yesterday. Taiwan Semi had a gap up this morning and basically has been sold into. So if you look at Taiwan Semi, this is not a good looking chart now. This is a big reversal candle up at making a new all-time high, and they sold right back into this. So, obviously guidance was not where the market really felt comfortable with. A lot of people took profits as it was up in here and now starting to roll over. So if you start to see some of the other names, like your big names like NVIDIA, start to feel that pain, you can see on the chart there, that's ugly, right? That does not look good. You're basically back down towards the lows. I'm sorry, back down towards the closes of yesterday already. If we get a weaker close, then I would start to be maybe even bearish on NVIDIA. AMD's done very well. MU's done very well with DRAM prices going up. I would go back and start to look at WDC, which is starting to round back up on the bottom here because of some of these comments about the storage prices are increasing. So there's going to be increasing across the board there. So a WDC, STX, or SanDisk, SNDK have been on fire, right? SNDK taking out highs. Something like that could be very, very interesting. Again, kind of bucking the trend of speculation. So MU has done well on that. AMAT, again, a lot of these are getting upgrades. AMAT gapped up and got sold into, and LAM in that same space, not reacting anywhere near as well, not having the same upgrade. So, but from an earnings perspective, we're going to start to come out with earnings. Most of the big banks are out of the way. We had a couple mixed in there. Goldman was down. JP Morgan, Morgan Stanley were doing okay. Bank of America was up a little bit. So I would probably come back into the UOA and look for opportunities in there. You can see MU's doing well, a lot of paper in Taiwan Semi. CRM is one, just to look at that on the chart real quick. That had a further deepening of their relationship with Google. And I really thought this was going to start to look pretty good, but they've sold back into this, brought it right back into the range. So probably not something I'm touching from a bull perspective until we can get a green candle here, start to show us that a back above this area that the sellers won't come in and sell. So I'm not going to be touching that one just because of the chart. Bitfarms has gotten sold into. Beyond Meat, I'm not touching. HPE, that was, I think, a downgrade, and that's sitting there precariously. Now, the banking sector, this is one that I'm looking at as a bigger picture. Now, that's coming in, and you can see just the pure amount of volume there. That's starting to pick up pace. So you look at some names in there like a WAL, and that's starting to look very ugly. So this is a regional, KRE is the regional banking sector, and or ETF, I guess you could say, but it covers the regional guys, not the big Goldman, Bank of America, Citigroup, PNC. PNC actually may have a small component in here, but a lot of these ones that are having banking problems due to some of this fallout from that Tricolor, First Brand, Jefferies debacle that's going on. If you don't know anything, just look up Tricolor or First Brand or Jefferies, and you'll see a lot of the nuances that all lead into this kind of fraudulent banking that's been going on. And I think that's going to play into a much bigger factor. CarMax already said that their numbers were bad. I think that's going to play a factor into Carvana. So Carvana, I'll give you an example of how to play Carvana. I would probably have to play this with some type of a put spread or a put butterfly. And it's kind of, and let's just kind of look at a put butterfly, how that could play out. Let's just go over to simulate, because I think a put butterfly in Carvana is a very interesting, this is a iron condor. Let's do a put butterfly. And by a put butterfly, puts, let's see, put, long put butterfly. So that starts to look like this. And what I would want to do is do something out of the money. So let's say maybe like a 340, 320, 300. That's a little bit wide, a little bit expensive. Well, they're basically saying right now for a one lot, it would be $3.23. Now I could tighten that up and say maybe I want to do like a 325 and do $15 to like a 310, and that's costing me $1.78. So my bet is saying that I want the stock to drop down to 325. Now, if you think it can go further, right, that would be something, again, we're going out to October 31st on this one. So this could be something where you want to give yourself more time. Now, you buy more time. The only problem with a directional put butterfly is that you don't have the decay in the short strike. So you want to kind of keep your time frame down here a little bit, and then if it does start to work, you can always roll it out for more time, right, by locking in some profits and having some good decay. So I wouldn't go too far on this. I don't mind this one, right? But if you can afford to go wider, I would probably go with a wider one and give yourself a little bit more room to breathe on that. So something like this, right, basically give you, if it does start to break down below 340, then I would have a put spread that goes from here to here. So this is a long put spread, which is the 340 put. You're short one of the 320 put, and then you have a short put spread that you have the 320 to 300 that helps finance. So that's why you run up like this, and then you start to give it back if it moves back down. Now, this is at expiration. So in order to understand this, what you have to, let me get out of that real quick, get away. Go, come on. And then I keep going too far. But you can go down, and what you want to look at is how does your time to expiration actually start to play out. So you can see as this curve starts to increase, as we get closer and closer to expiration, you're not going to make a lot of money until you get into the fold of your, not only move down, but have some decay along with this. So this thing starts to turn green, starts to get going, starts to move up, right? And you really start to make your money. Now, there's plenty of opportunity here to be in this and kind of ride the wave over time. And you can have dramatic movements. You can see we're not making a lot of money. And you can go all the way down to 300 and come back up and dance around here. And this isn't going to move that much in terms of a spread. But you should, if we do move up and you're fairly insulated from an implied volatility perspective as well on something like this. So that could be one you look at if you believe that this is going to be another rollover here. They did run it up pretty strong, but if we start to come back, take out lows, maybe you want to use a trigger level. I had looked at this before and said if we get back down below here from a 330, 315, 300 put spread. So now, given the complexities of this, I'd probably look at something like this again. But Carvana was one that I think was on my radar there. Here's your First Majestic, AT&T. Barracks Mining has been one we've looked at. That's a big mining company. Used to trade that back when I was on the floor. This Denison Mine is another one. Again, it has done very well. So it's fairly low priced. It's only, I think, $3, but it's come from a very low level. This American Battery, I am in the hole on this one. I'll tell you why. I jumped into this a long time ago. That's not what I wanted. I want to be up here on this one, ABAT. But this is starting to come back from the dead. Actually gotten crushed here in the last day. But this is one I've been absolutely destroyed on. I jumped into this thing way back in here. It was like $16 or $17, and I wrote it all the way down and kind of sitting on it with the stock because let me clarify. There was a reverse split in here. That's why the stock was up in here. I bought it for like $2 or $1 and change, and it did this reverse split. So my mark is way up there, and it's been absolutely lit up today. So that is one I think is very, very interesting for the bigger picture. It's a recycling company for batteries. So what's that symbol? ABAT.
Now, are you're playing that straight with the stock? Someone's asking.
I've been in this for like 3 years now. But again, I should have gotten out up here when I was up here and taken the loss, but it's now gotten cut in half here today. On again, a lot of these bigger names, the speculation coming out of the market. So a lot of these names are down there. Could be news on this. I have not been able to find anything on it. Maybe there's something that I haven't seen yet.
Now, how's the gold? How's silver participating in this run up in all the moves to the metals compared to gold? It seems like it's maybe underperformed.
Historically, it's underperformed, but I would say in the last couple of weeks, it's probably very similar in terms of a price action. Now, gold, it's funny. I made a bet with one of the guys I work with, and the gold futures. The gold was trading like 3,800, and I said silver was going to get to 50 before gold would reach 4,000. Well, in terms of the futures here, seriously, the gold's been 4,200 now, right? So the gold, this is GLD on the ETF, right? So it's an iShares Gold ETF or trust, whatever you want to call it. So this is lagging that price by a little bit. Obviously, they're trying to keep it under wraps here a little bit. So the guys that can short this a little more aggressively. But you look at the movement here, I would say the gap ups have been pretty ridiculous in terms of GLD, and then SLV, right? You can see we've had pretty similar on the chart, right? It's moved pretty similarly. I guess it's about how your actual dollars compared to the price of the when you're starting this. But I mean, trend wise, they've both done very, very well in the past couple of weeks here.
Now, how is the sell-off on Bitcoin recently? There was a big move over this Friday on the Trump announcement, right?
That's been down and staying down. And I don't know if I can get BTC. Here's the BTC Bitcoin. You can see the sell-off and just continues to be down towards the lows. So this is a mini trust for Bitcoin through Grayscale, and it just looks ugly, right? So we got out of we were in IBIT. And this is one we got out of back in here as it took out the lows, because we were in this run up and it really rolled over hard on Friday. So thankfully we got out of that, because that's down at 61 again. This is probably not a bad idea to start to look at opportunities if it holds, if you start to see some green candles in here. But right now, man, this just looks very, very ugly, right? That's
now keeping your eyes on this, would you keep an eye on the options? What would your strategy be if you saw a couple greens in a row?
Well, if I saw greens, I'd probably want to make sure that it's going to confirm something. So just for an example purposes, maybe it takes out today's high, right? And I get a green candle if you feel like it's going to reverse. And the nice thing about that is then I could say I'm going to use this low as my stop. So let's just put one in here, and I'm going to put a hypothetical, because the advantage of a system like this is we can do an entry bot and say if it gets
now the systems Ryan's talking about, for those who are joining for the first time. This is OptionsRobot. He and his partner have created this product. It's one of the best products on the market if you want to manage your trades while you're working, or you can be in the market and not be looking at the market, right? So what Ryan's doing is entering the ability to exit and enter a market at points that he's choosing at this point.
Yeah, so just to kind of highlight that, what I'm creating right now is an entry bot. And I just said, okay, we get back above 63.50. That was a little bit above the high from today. So that would give me kind of confirmation. I'm not really worried about the $2 in here between where we're currently trading and that level. This gives me at least some confidence that I can trade against that level and go from there. So if I just say, all right, I'm gonna get in, maybe I'll use a quick entry. I'll start at the midpoint, work my way up when it gets to that trigger level. So that's gonna suggest I get above that chart. Now, this isn't as relevant, but let's just say I'm going to put a hypothetical in here that and this is basically just gives me a template. Now I can trade and move on for my day knowing I have some offers out there. So if it does move and I'm not around to see it, I can take some profits off the table. So this is basically saying if it rolls up if the ETF goes, this is the option gain goes up by 20%, I'm going to take some profits off and continue to roll my option up. I'll keep doing that until I get to a point of exit as it keeps going. But I also have stops in here as well. So if it does move to the negative side, it will stop myself out. So if it moves lower, then I'm going to basically just get, so basically the way I could handle this is if I think my stop, which is option, moves down by 20%, I could say I could use like the low of the day or this area. I could say if it drops down by stock value is less than, let's just say 60, we're currently trading with a bid of 61.25. Let's say 60.75. If it drops down below that, I would just get out of my option, right? So just an easy way to set that up and build in your stops so you're kind of comfortable with what's going on in the risk. But you have the potential, if it does go and it starts to move back up, I'm ready to play it. So it's a very simple way. One of the reasons we built this is because we are active, just like you are, Will, right? And you can't watch the market all day long. You're doing other things, right? You get distracted by family or meetings or all these things, and something moves and you get pissed off. By using a system like this, it says, okay, I may not gotten the perfect fill that I wanted, but at least I did something along the way that I locked some money in.
Yeah, and you can do your research at night, put all your orders together, set it up, and let it run. Right. And then,
yeah, we got some cool things in there too. So I haven't really discussed that with you, but we do have a gap protection protocol. So if I'm in a position like earnings, and let's say we gap up the next day, if you have a bunch of orders out there, it's going to go to the highest one. So that's a kind of a cool tool that we enable here.
Let's stop it there and let's talk about that on Monday when we have our show after hours.
Sure. Sounds good.
Leave everyone hanging a little bit.
Little Ryan, teaser.
Thanks for joining, and thanks for doing this on Geez, it's a Thursday now. We usually have our shows. It's an after-hour show on Monday. I was tied up 2 days in a row, so we couldn't do it today. And thanks, Ryan, for doing this to the Chameleon
All good. Appreciate
community
it.
and for everyone who joined for the first time. Great job, my friend.
Thank you. Take
All right,
care.
we will see you on Monday. You have a great weekend. Thanks, everyone, for joining. Stay safe out there. Actually, let me just share something just for you. There's probably people for the first time joining the show. When you hit the Market Chameleon landing page, there's a bunch of places, and as you're going through and looking at all the great free information, where you can start a free trial. It's a 7-day free trial. I know OptionsRobot also has a 7-day free trial and a bunch of great plans. So check out OptionsRobot. Check out Market Chameleon. Everyone, thank you for joining and have a safe trading day. And hopefully you can stop by tomorrow morning, 9 a.m. to see Dimitri and I. If you're on YouTube right now, thumbs up, always appreciated. Everyone have a great day. Thanks.